Okay, welcome back. Let's get started. We will start another deep dive session. You have, I think, throughout yesterday and today, one of the most frequent mentioned stakeholders is SME. So here we are, a session focused SME and supply chain finance. With that, I'm very happy to invite my good friend Marcela. Marcela is the climate finance lead for Latin America, Caribbean, and also Europe. And most importantly, and she has been the SBFN coordinator for Latin America since its inception. So Marcela, the floor is yours.
Thank you. Thank you, Ron. I'm gonna invite my panelists to the stage. Can I have Joyce, please, from the Central Bank of Philippines? Alex, we have two Alex. So one Alex. Alex number one from SIGAP, please. Alex number two from Liquitech, thank you. And who am I missing? And Lucila from the Banking Association of Mexico. So I know that this is the last session before we close this, and this has been a very dense event with a lot of information for everyone. So I'm hoping to have a very relaxed conversation here with our panelists that have a lot to contribute to the discussion about SMEs, and that has been a recurrent question in every other panel about what do we do with MSMEs? What else can we do? So the idea is to have an open conversation, and please do feel free to raise your hand if you have questions. MSMEs in general in the world represent like 90% of the productive companies, but in Latin America, and this is important for my colleagues from the region, it represents 99%. So this is a very important segment for our banking sector. And one of the things that we need to do is to serve them and serve them well. And in Latin America specifically, there is a 5 trillion finance gap for MSMEs. So it's an opportunity for the banking sector as well. And one of the options to serve these MSMEs is through supply chain finance. So for that, we have this very rich group of people here to talk about it and how we can use all the knowledge that we have globally to do it better, let's say. So maybe I'll start with Alex number one from SIGAP. And Alex, if you want to say something else about your background, please feel free. But SIGAP has been doing a lot of work around MSMEs and how to serve them. So I would like you to share with the audience what are your key thoughts about what we can do around MSMEs and the role of supply chain finance.
Wonderful, thank you. And thank you for the invitation. Thank you to all of you for being here. I do have a few slides. I don't know if they're teed up. I have the clicker here. All right. Maybe just to start with a quick introduction, like you said, out of curiosity, maybe just by show of hands, how many of you have heard of CGAP? All right, we get the World Bank IFC folks seem to know. So CGAP is something like SBFN. We are a program housed within the World Bank, and we're dedicated to advancing financial inclusion. My own work at CGAP focuses on innovations in micro and small enterprise finance. So I have a lot of slides, but I'll go through them quickly. Hopefully it'll be interesting. Starting with this one, as we were just talking about the proportion of employment here that is derived from micro and small enterprises. You can see in low income and lower middle income countries, it is well over 80, 90%. So we have to support them if we want to think about inclusive growth and give them what they need. But yet there's this massive gap in financing for them. And one question in this context that would be worth asking is, to what extent is this gap going to increase or decrease as a result of climate change? And I think there are at least two reasons to think that it might actually increase. One is that these micro and small enterprises are actually becoming more risky because they are often the victims of climate change, and so that's could potentially cause a retrenchment and avoidance of serving these customers. And the other is potentially the regulatory burden from the types of standards that could be set if they're not done in a careful and proportionate way would make it more expensive to serve these already very difficult and expensive to serve customers. So at CGAP, we think that there are some opportunities for digital technologies to make an impact and help close some of the gap. I'll just skip over that slide. Here, we did some research at CGAP looking at categories of innovative, technology-driven, data-driven business models that we think have the potential to close the gap. I want to draw your attention to embedded finance. We have research you can see about all of those. And actually, Alex, I might classify your business as in the marketplace lending, but we'll get to that. For now, just focusing on embedded finance, which CGAP defines as the seamless integration of a financial service with a non-financial service. And just to take an example here from Latin America, Mercado Libre, Mercado Crédito. For those of you not from the region, this is the largest e-commerce platform in Latin America. So you can consider that a non-financial service, the e-commerce platform. The financial service is that using the data from that platform as a basis for lending to micro and small enterprises. So CGAP did some research with Mercado Crédito. They have by the way, in 2022, a $2.7 billion portfolio. About 40% of their customers are micro enterprises. Now, $2.7 billion might not seem like a lot in the context of like a Santander Bank or the central banks that are here, but in the context of microfinance, they're actually one of the biggest providers of microfinance these days. And our research showed that, let's see here, 69% of those surveyed report an increase in their ability to achieve their most important financial goal as a result of getting credit from Mercado Crédito, and 49% of the women on the platform said that it was their first time getting access to credit for their business. But I'm here to talk about more integration into supply chains, and this is one supply chain of FMCG value chain. On the far end side, you have the FMCG companies, so Unilever, Coca-Cola, et cetera. And on the other end, you have the consumer. And right before you get to the consumer, you have the micro retailer. So these are your corner shops, your Dukas, Kiranas, Sari-Saris in the Philippines. And these are often the interface for the consumer. They constitute a $900 billion market globally. And there's a number of companies that are establishing e-commerce platforms to disintermediate this value chain and create efficiencies through digitization. In Africa alone, there are companies that represent this business model have over $500 million in financing that they have received, mostly equity financing. So it's a large global phenomenon that we're seeing. Maybe just 1 minute to wrap up. One of the companies is Anne Friends. We worked with them. I have a video about them. If we have time, maybe we can share it at the end. But just to note how some of these companies are addressing the challenges that are inherent in micro and small enterprise finance. They're reducing the cost of serving through origination is reduced because the customer acquisition cost is not there. The underwriting expense is reduced because you have the data that you're able to leverage from the retail transactions and other data. Maybe just skip to the last slide. And here the benefit for the customers, focusing maybe just on the cost and the access. Well, just take the access, for example. Where in your countries can you not find a Coca-Cola? So imagine if financial services were able to trail behind that Coca-Cola and deliver the financial service to the micro enterprise in the rural areas, in the challenging areas to finance. So that's why we're excited about this. We think that there is a potential to channel financial services down to even micro enterprises, much less, or even more so, once you get into the small and medium. We have a whole lot of other research on this. I could go on and on, but maybe just in the interest of time, I'll stop there.
Thank you so much, Alexander. There is a lot of information in CGAP's website and a lot of researches that you can go to. So I invite you to have a look at them because they're very interesting, and all these figures that Alexander has been mentioning are there in the reports. Let me go to Alexandra now because I think that it flows that way. Alexander was talking about digitalization and the role of fintech providers. So how do you see the role of those fintech providers in terms of leveraging technology and digitalization to support MSMEs, to support the compliance with regulation, electronic invoicing? So please go ahead and...
I don't have a presentation like Alex had, but I expect like to fulfill with my comments what's happening in the fintech industry, supporting all the supply chain finance process. So as we know, in the financial spectrum, fintechs are now supporting SMEs financing, and they are taking advantage of the digital invoice to go with this purpose. So when we talk about digital invoice, it requires in a company to change all their operational processes, and they need to get adapt to this new life in which they run to a paper base to a digital base in the invoice process. And if we talk about the invoice as a financial instrument, it's even more complicated to adapt the financial institutions to get ready to run a process in which they can finance SMEs using the invoice as the element to go with the process. So in this point, fintechs are very important and are the perfect allies for all the financial institution banks, because they can carry out the financiation process for SMEs, developing all the technology that it has to be developed in a very short time for banks, and it's evolving all the time. So fintechs understands very good these processes and can run them in a very efficient way. So there are many risks that are around an invoice financing process regard to technology, security, regarding to data transfer, regarding to electronic endorsement, KYC processes, compliance, validation ID, etc., etc. So fintechs are like the net that supports the banks to be sure about the process they are running. And if we talk about the regulators, for example, this combination lets the regulators have more accurate information in real time of what's happening in the real sector of SMEs. They are knowing how SMEs are getting financial inclusion and how is increasing the gap, it's reducing the gap. It's totally opposite between the traditional financing and now these new ways of financing. And if we can join the information that was discussed this morning, for example, with the data that is transferred from the fintech industry, we can have, or the market or the regulator can have precise information on how these small and medium companies are working towards sustainability indicators as well. So I think there are a lot of opportunities that fintechs can give to regulators in this chain of three parties that are participating, not only for the final benefit for the SMEs that are the most important in this scope, because they are accessing to financial services that in the past maybe they didn't have, but also with the information that is in the market with the regulators, there are some challenges and changes that can be applied, like to have a better environment in terms of financial inclusion and to have a better performance in different indicators that are important for the regional economy.
Thank you so much, Alexandra. And that also opens the door for Lucila's intervention. I think that Mexico and Colombia are probably the most advanced countries when it comes to supply chain finance. Mexico started years ago with the NAFIN's platform for supply chain, and but I'm not going to talk about that because I think what matters now is from 2001, when NAFIN launched this platform, to now, like financing for SMEs has increased significantly, but Mexico is at another level now. How do we incorporate that sustainability angle to supply chain finance? Why do you think it's important for the banking sector to start looking at sustainability, not only for supply chain finance, but for any other products that are in the market?
Thank you. Thank you for the invitation, Marcela. Thank you for all IFC team for this invitation, this opportunity. Well, I have been enjoying all your participation and learning a lot. As we know, a material issue for banks is how we grant credit and what type of project we finance. So for this reason, in 2018, the Mexican Banking Association launched a green taxonomy exercise to promote transparency and provide homogeneity regarding the necessary requirements for loan to qualify in is agreed. This motivated us to participate with the Ministry of Finance in Mexico on the development of the Sustainable Taxonomy of Mexico, where we received valuable support from IFC. As the association, we are committed to promoting the implementation of the taxonomy, as well as the Sustainable Financing Mobilization Strategy, both initiatives launched in 2023. It must be noted, however, that the motivation of the banking community in Mexico to promote sustainable practices in finance began much earlier in 2007 when the Sustainability Committee of the ABM was created. Given that there is still no sustainability regulation for banks in Mexico, in 2016, we created the Banking Sustainability Protocol, which started with 18 signatory banks committed to implement all the principles and the pillars, and which currently we have 42 signatory banks representing close to 90% of the assets in the commercial banking and 100% of the development banking. And more recently, in 2023, we created the ESG Commission as a step forward in our governance, because before this topic was included in the Risk Management Commission and now is an independent topic to be discussed in the Board of Directors. To give some perspective, we only have 9 commissions at this level, so now we discuss about sustainability business in this Board of Directors. For all of this and the change in the way of doing business, banks in Mexico are more aware of the importance of accompanying their clients to mitigate the negative impact and enhance the positive consequences of the projects they finance, especially with SMEs, considering they are the main engine of our country's economy. They generate 8 out of 10 jobs in Mexico, but in our country only 36% of the MSMEs are formal. In the company's portfolio, 96% of borrowers are SMEs, but they receive 50 out of every 100 pesos. I have 2 examples of collaboration between the public and the private sector to promote sustainable finance for SMEs. The first one, based on a deep analysis, this year we work with our regulators on making the requirements for financing SMEs more flexible, with which we hope to grant around $500 million more in loans each year compared to what is currently granted. The second one, based on the common agenda between commercial banks and development banks from the side of the government in promoting financing SMEs. We already have some sustainable products with the guarantee from a development bank. I want to mention 3 products: credits with preferential guarantees for SMEs in locations that require greater economic development, eco-credit for energy-efficient projects, and women's industry for women who run their company or companies where a group of women are the majority shareholder. So in summary, In the Mexican Banking Association, we think that if we eliminate the barriers to reach more formal SMEs that are currently not being served, if we promote business formality and take advantage of productive growth through nearshoring with the United States, the potential of credit for SMEs portfolio could increase around $8 billion over the next 5 years. And we have the opportunity to accompany them with sustainable financing and thus accelerate compliance with the SDGs and meet the Paris Agreement commitments. So
Thank you. Thank you, Lucila. And let's go to the more attractive question of this panel. So I've been talking to some banks that are here, and we've been discussing how difficult for the banks is to make all these efforts to include SMEs, to give them the sustainability angle, to start collecting data, to help them create their sustainability strategy to get to that net zero target that we have. So what can policymakers do, regulators, banking regulators, to support this inclusion of sustainability into products like supply chain finance?
Yeah, thank you. I'll be talking about I was telling Marcela earlier, my intervention would be the least sexy part. We've been talking about regulations the last 2 days, but yes, of course, regulators have a range of policy tools to use to promote ESG integration among banks. Of course, it can be an explicit requirement or supervisory expectation. In the case of the Bangko Sentral ng Pilipinas in 2020, we issued our sustainable finance framework, which sets out our expectation for banks to integrate ESG considerations in their governance, in their risk management, and their business strategy. And also, it also even sets out an expectation for banks to have an increasing target for their sustainable finance portfolio. And then, of course, another policy tool would be disclosure, ESG disclosure. And we've been talking about sustainability report earlier. And disclosure requirements really have an enforcement effect because, of course, when you disclose something, that tends to influence the behavior of banks to go deep into their ESG practices, to manage market expectations and manage reputational risk. Another policy tools that central banks use is regulatory incentives. So in the case of the BSP, we issued last year a regulatory incentive to promote sustainable finance in the bank. So one of these is the gradual reduction of reserve requirement for sustainable bond issuances of banks. So from 3%, we're bringing it down to zero reserve requirement. And then we're also increasing the SBL, the single borrower's limit for sustainable finance and loans. And in the Philippines, we still have, I don't know in other countries if you still have mandatory credit quotas for the agriculture sector. But in the Philippines, we still have that mandatory credit requirement. It's at 25%, so it's quite prohibitive for banks. So we're using sustainable finance as an acceptable mode of compliance to the mandatory credit for agriculture and rural development. But apart from these regulatory policy tools, we've heard yesterday that central banks can also use soft tools like publishing data and reports that they generate from their supervised entities to generate insights, let's say, on the performance of ESG-informed loans versus, the regular loans. They can also publish report on the level of industry adoption of ESG. And these types of report can nudge banks to think about their ESG practices more seriously, not just from a compliance mindset, but really as a strategy. If they see that there's a business case for it, as data would show, and it's also fear of missing out. kicking in. So these types of initiatives from central banks also help us boost it.
Fantastic. Thank you so much, Joyce. And let me go back to Lucila for a second because I think that Mexico has been doing a great job. And Lucila was just mentioning some of the regulations that have been in place in Mexico on the capital requirements, for example, for women-owned SMEs that the Ministry of Finance put in place a couple of years ago. And I was wondering if you could share more about that expectation from the banking sector in terms of what else is needed. I mean, you already have the sustainability strategy within the banking association, many banks already implementing that. Why do you think they need to keep working on this? Do they need more regulation? Do they need more training for their board of directors within the banks so that this comes from the top of the banks? What else do they need?
Okay. Yes, we have that change in our regulatory requirement for provisions, and women are better payers than men, according to the results of the risk management studies that the authority conducted. And well, this part of regulatory came together with another change in the law from Basel III. So that could help to give some small preference for credits to women, but just a small, I think, a small improvement in the rate. So we recognize that the challenge is inevitable, and a new economy is being born where business must adopt or face exclusion. And we are trying to supporting SMEs, women, and promote the inclusion of credits. So the banking is one of the industries where institutions are migrating to sustainable practice at their own pace, which includes the financing of projects that will lead the country to becoming a low carbon and more inclusive economy, which could limit granting financing to clients without ESG practices. Another component that is imminent, and yesterday we discussed about it, is the issuance of disclosure standards, and our colleague Joyce just talked about that too, under sustainability accounting criteria, which are being issued internationally through ISSB from IFRS, and which hundreds of countries, such as Mexico, take them as a reference for the issuance of local accounting criteria. So with this precedent, we can assume that in the short term, SMEs will have to provide ESG information to various counterparties, including banks, in order for the company to have access to credit. Additionally, in this forum, we agreed that the economy as a whole is exposed to climate risks. So banks could help SMEs to be aware of what type of physical or transition risk they face and integrate them into a sustainable strategy, not only as a measure of credit risk management in banks, but also of MSMEs resilience. But due to this specialization that a banker executive requires is a challenge, more even in large banks. And we need to invest in building capacity in a transversal level in the organization, not just at the sustainability areas, in the whole team of the organizations, beginning from the governance of the institution towards the executives at the branches. As example, in the last 22 years, the cost of natural disasters in Mexico reached around $32 billion. This is equivalent to 1.3 times our SMEs credit portfolio. And as we know, it is likely that this type of disasters will increase and intensify. In addition, there are transition risks to plan for, three of which have the potential to hit SMEs, particularly the radical changes in production practices that corporations require from supply chains, regulatory changes such as carbon taxes, and changing consumer preferences. So as an association and bankers community, in SMEs financing forums and fairs that we coordinate, we can promote the benefits that come with implementing practices with ESG criteria and emphasize that it is not as complex as one might think, since MSMEs can implement ESG practices with the support of collaborators, building environmental and inclusive culture, and recently with the help of the development banks in the case of Mexico to conduct technical studies for energy efficiency to be financed by commercial banks. In the sustainable strategies of SMEs, banks can finance the application of energy efficiency, as we just say, the efficient use of material resources, thanks to better technologies, the modification of process to limit the dependence on natural resources that may become scarce, and waste management. Another practice that is important to work together with MSEs is creating inclusive work space free of violence. Incorporating these sustainable practices and help SMEs to disclosing them will enhance the company's reputation and create market opportunities. In summary, in Mexico, the types of sustainable products that banks offer are credits with guarantee from the development bank, in particular with NAFIN, credits for green or social projects, sustainable value chain financing, green and sustainable credits for import trade, green sustainable and social bonds, use of resources more likely to be used from medium companies, bonds and credit linked to sustainability objectives. So we need to work together in the whole company or in the whole bank to promote the awareness that we need to meet these goals.
Thank you, Lucila. We have talked about what the fintech world can do to facilitate these to banks. And I know, Alexandra, that you had something in your mind before coming to this event, and you are a different person after this event on sustainability matters. So what else do you think that the fintech world can do to facilitate the inclusion of MSMEs on the one side, but on the other side, on the sustainability of those MSMEs?
Okay, yes, I am the disruptive person in the panel, coming from the fintech industry, and for sure I have been experienced how these tools that come from fintech industry are having an important impact in terms of financial inclusion. That I think it's the first door that came from a change of the way that we are doing things and sustainability itself. So we are getting close to that market that was unattended, or maybe was partially attended by the traditional banks institution, and we are complementing banks to have access of their needs, of their behavior, and all the things that maybe they can add to the market in terms of the sustainable indicators that can be created with the regulator or with different actors together, like to get that information from fintech. So once we can have, for example, open data, that is one of the things that fintechs are working for, we can get a lot of access with information regard to these topics that we are talking about, but also we can create new scoring processes to see the risk that the banks can afford or can get in their approval processes. So they can get, many other solutions in which they can access to other financial products that in the past they didn't have. It's important, for example, to see in countries like ours, in Colombia, for example, that is where I came from, the people that sells in the streets avocados or fruits, now they are using electronic wallets to receive the payments. So it's something that in the past didn't happen, and it's something that it's creating a new environmental fundamental world for these people that is not only receiving money in a digital basis, but also they are now getting included to have a bank account. They are included to have, with the performance of the incomes that they have, they can get access to a credit, they can get access to a credit card. So that's why fintech has a very important power in the way that we are financing our people that was unattended in the past. For example, the sector in which I am working also, that is the factoring industry. I lead a company in Colombia that is called Liquidtech, and we are working in the financing SMEs with the invoice. It's important to point out, and I want to have this space to share it with you, that in Colombia we have a very powerful system regarding all this digitization of the invoice in the market, understanding that the invoice itself has the power to, as I say, put some gasoline. I don't know if this is the correct word, but it injects gasoline to the cash flow of the company, and yeah, and they can continue growing their businesses with the invoice. So in Colombia, the invoice, that is an electronic invoice, constitutes a financial digital instrument that can be negotiated in the market, because we have a central tax authority in which the invoices are registered, and they have the traceability in this system. So we can see how much value is the invoice itself, who is the final tenor or beneficiary, what is the payment, what is going to be the payment date. So it has increased a very big opportunity, not only for tax purposes. That is the message that I want to leave here, because in our countries, maybe we are considering, the regulators, we are considering the digital invoice as the way to control taxes, but we should consider invoices as the way to finance our companies, our SMEs, because once we have an invoice that has a value inside, it has like a power to be like the tool in which SMEs can get access to liquidity. So with this tool, we have offering SMEs financiation not only from banks, for funds, but also from international investors that now are interested to participate in this market. And in my company, we are pioneers issuing bonds in capital markets based or backed with Colombian invoices. So if we talk about the future, I'm really convinced that maybe we can, with Latin American invoices, maybe issue bonds that are related to maybe green bonds that are related with the supply chain finance, that commit some points in the ESG indicators that we have. So there is a lot of power here in the invoice, and I want you to get this message because I'm very enthusiastic and passionate about the power of invoice to support the financial inclusion of our SMEs, and combined with all these fintech elements that are included in this business.
Thank you, Alexandra. And let me go back to you, Alex, on the different options, the financing options available in the market. You talked about new business models. So what else is needed in terms of tech-based financing options? What does it take from those options to really reach those underserved segments?
So I think what Alex was saying makes a lot of sense in terms of how these tech-enabled models can overcome some of those traditional barriers, right? So one is data. Trying to understand the credit risk of the micro or small enterprise using alternative data and things from a regulatory and policy perspective, things like open data, open finance, create that possibility, make it a lot easier for these innovators to integrate that data. The other thing that is also worth mentioning is just how this use of data and automated technologies reduce the cost. And often that's even a bigger barrier than the lack of credit information. It's just very expensive to serve a lower income, small ticket size loan. And if you're able to use these technologies to automate the processes, you are able to bring those costs down. But getting now actually to your question, what's it going to take to address those issues beyond the sort of policy and regulation issues of putting the rails in place, digital payments, fast payments, open data. But beyond that, and I'm sure, Alex, you'll agree with me, the funding ecosystem for companies like Alex's, I think, needs to shift. I think there needs to be a change in the mindset about how, even to put the IFC on the spot a little bit, how we think about what is the role of innovators, disruptors in creating these new opportunities. Because we do see, from CGAP's perspective in our research, companies like Alex's struggle to get the financing they need to prove their model and then to scale, either in partnership with banks or as a standalone fintech business. You do see some of these businesses getting to scale and having some success. But I do think there's a need to shift our mindset a little bit, go back in time to when microfinance maybe was a little bit more sexy, and there was more thought about how the donor community, the investment community can incubate and push some of these business models along until they get to the place where they can really take off on their own.
Absolutely. And I think that we've heard that along these 2 days, but those micro and small and medium enterprises are probably the most vulnerable as well to climate change. So it is important that we take them into account, that we incorporate them into the system, and that we provide the financing they need so that they can be resilient in time, right? We are almost done and we have 8 minutes, and I think those 8 minutes are for the audience, right? Yes, okay. So if you have any questions for the panelists or for IFC, for the time being, I can say, that we in IFC are promoting this kind of financing and new business models. We've been working in Colombia a lot, in Mexico with electronic warehouse receipts, open finance, open data, trying to make it work, even with a supervisor as well on open finance. So that's part of the role that we are playing in the different emerging markets. And I'm very proud of my LAC members of SBFN because I see that they are doing a lot in terms of both the market and the regulation in terms of sustainability. But
Yeah, thank you, Marcela. I have a question for Alex, the lady. I think it's very interesting. You talk about the new ESG potential indicators and rating tools for risk management, and which could potentially support banks to use. I guess my question is if you could elaborate a little bit of the ESG indicators you develop, and also just to understand, are you envisioning, is this happening, or is this just a plan? Is this a commercial service that you kind of sell those data to commercial banks for risk management? And a related question, is there a data security concern involved? Thank you.
So that's why open data, it's a requirement for having like this models more sophisticated and more accurate to not only to predict some defaults that can occur in a financiation transaction, a factoring transaction, but also to give to approve exposures to smaller debtors or payers or companies that are increasing or are having a good performance. So in this moment, at Liquidtech, we have a scoring model that we have created, incorporating the data that we can get access to, that it's limited because data is not open yet in Colombia, but we gather information directly from the client, maybe with their day-to-day information in their factor in their invoice system that we can get connected to, because they allow us to do it, but it's not something that is open for the market. And that's why from the Colombian FinTech Association, in which I am the president of the board, we are trying to promote, because it needs some, regulatory and some aspects to go further of this. But we have connected, for example, insurance companies that give us like some alerts of what's happening in the market with some clients, so we can take decisions if we see that something is happening, but we're still like reacting of what's happening after a situation goes. We are not predicting what is happening. In our scoring process with the clients that I currently have, what I do have in this moment is that I can, with artificial intelligence models and all these heat maps and all this stuff that is related to technology, we are having like performance curves of a client behavior, a payment behavior, so we can follow their behavior in a time. But it needs like a period of more time, like to have like a more complete model. So, but if the client is not mine, I don't have that information. So that's why it's super important to have that information from other players, so we can have in all the market the information to see, okay, this company is having a good performance. Okay, this company it's allowed to have an exposure. Okay, and if I put in addition an insurance, this is a client that I can go deeper to finance or to issue a bond in the U.S. or in Europe, backed with invoices of this client. So we are running the scoring process right now with limited information, but for sure we think this is the future, and we think also that we can. With open data, in an open data environment, we can share this information with banks and financial institutions as well.
Any other thoughts from the audience? Good. So, well, I think that, this has been super interesting. Thank you so much. I think that there's a lot to do. I don't know if you have any final thoughts, Joyce. Do you have any final thoughts? Yeah, exactly.
Yeah, it's so interesting to hear from the practitioners making use of the regulations like on open finance and alternative use of data. So, but as a final word, perhaps as regulators, I think we need to be humble enough to know that regulations have limits. To an extent, we can enable, but there are other elements to market development, to addressing barriers like MSME capacity that will have to be addressed not just by the central bank but the whole industry. There are fiscal incentives that maybe need to be put in place, infrastructure that have to be put in place maybe by the Ministry of Finance and Trade. But regulators can have an important role in terms of convening, in terms of advocating for these changes. So while regulators need to be humble enough to know the limits of regulations, we also need to be, I guess, bold and committed enough to use whatever tools we have, our convening power, our advocacy tools, to bring about the change that we want to see for the MSMEs.
Fantastic. Thank you so much. If this is what I got from this event, I'm grateful. Thank you so much. Thank you, everyone.
Thank you.